Here's the 30-second lesson on what legends know. Never practice nunchucks in a crowded room. Never eat chole before a road trip. Always take your shirt off before you iron it. Don't take a call near a swimming pool. And don't forget, saving is not investing. Legends don't just save, they invest in mutual funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this week's Macro Sutra. I am Yuthika Bhargava and today we will talk about the latest GDP numbers released yesterday. We have with us Radhika Pandey, Associate Professor at National Institute of Public Finance and Policy, who will explain these numbers to us. Radhika, to start with, can you just give us a brief on how these numbers were? Were there any surprises, good, bad?
Yeah, so, if we look at the conversations around the Q3 numbers that were coming along, there was expectation of a slowdown because we've had 2 quarters of plus 7% growth. So it was expected that in the second half, the growth will be slightly lower. So the median projections were around 6.8% or 6.9%. So when the numbers came out, they have surpassed the expectations by a wide margin. And in fact, the RBI's projection was also 7%. So, all these projections, whatever people have been expecting, the numbers are way above those expectations. So it's a positive surprise on the number. So the third quarter number comes at 8.4% of GDP. 8.4%, and even for the previous 2 quarters, we have seen that the numbers have been revised upwards. So now for each of the 3 quarters of the current financial year, we are having above 8% growth. So 8.1, 8.2 and 8.4% growth. So yes, there is a positive surprise on both the quarterly numbers, and because the quarterly numbers have done well, even for the full year, the estimates have been scaled upwards. So the first advanced estimates projected a 7.3% growth that was just released in the month of January, and now yesterday the numbers project the growth at 7.6%, which is understandable because if your third quarter is boosting growth, so overall growth numbers also are revised upwards.
So is it that all sectors have contributed to this growth, or there are some sectors which have done exceptionally well and some which are still lagging a bit?
Yeah, so if we look at the third quarter numbers, the 8.4% growth, from the activity side, if we look at the sectors like agriculture, industry, services, there if we see agriculture has been a laggard, and it was expected that in the second half, agricultural performance will be subdued because of the El Nino impact, uneven monsoon, and also we saw the first advance estimates of food grain production for this year. It pegged growth to be lower by 4.6%. So Kharif output is lower. The impact of Rabi crop has not been factored into these numbers. So that is why agriculture performance was actually in the contractionary zone. So agriculture actually decelerated by 0.8%. It contracted by 0.8%. But what gave a boost to growth was industry and services. Services was expected to perform well because of the festival impact. We saw October, December, all festivals were there. And also, one of the main segment of services is the trade, hotel, transport segment. And that got also a boost because of the World Cup. World Cup was organized during October, November. So that also gave a boost to the services sector. So services, there was no surprise. It was expected that services will do better in this quarter. Industry continues to perform well, though there is a deceleration from the second quarter.
Okay.
From the second quarter, there is a easing of growth, but still it is reasonably good. It is in double digits. Manufacturing, which is the main component of industry, it posted a growth of 11% plus, so it is good. But what is important is to, see in the next few quarters, what's going to now happen is that the profitability of companies may, start to normalize. Till now, we saw profits were driving this industrial performance, profitability of companies. But now again, if the raw material cost starts to rise, profitability will start moderating. The boost to manufacturing sector performance that we got in the second quarter and third quarter may not be there in the fourth quarter. So that is something to watch out for. But as of now, industry did well, and that is reflected in the overall profitability numbers, which are great, which are in double digits for the companies in the manufacturing sector. So that is from the activity side. Again, from the expenditure side, it's the capex push of the government that has been driving growth, which is still there. Even in the October-December quarter, overall revenue expenditure was down, but capital expenditure still continues to post a growth of almost 25%. So that is driving, and there are some green shoots of recovery in private investment. So that is driving the growth from the expenditure side. Consumption, there was a slight uptick because of the festival impact, but when we'll talk about the annual numbers, we'll see that overall consumption has not been performing well. So from the activity side, the key drivers are manufacturing, services, and construction. And from the expenditure side, it is the government investment.
So coming to second advanced estimates, for full year, can we do a comparison this year and last year? Which are the sectors? Like you talked about consumption. How was consumption previously in the last fiscal and this year?
Yeah, so consumption is something that continues to remain a pain point. We saw in the first advanced estimates also that consumption was estimated to grow at 4.4%. But when we look at the second advance estimate, that is after some more data has come, they have updated the advance estimates, the second advance estimates for the current year. Again, it shows that consumption is estimated to fall from 4.4 to 3%. So that is a cause of concern because we know that consumption accounts for 60% of GDP roughly. So if consumption continues to not perform well, so there are questions about the sustainability because investment is driving growth, but beyond a point, investment also needs consumption to pick up. And we did a discussion last week on the various items of consumption, and we saw that the premium items of consumption are doing well, but some of the items of mass consumption are not doing well. Sales of those commodities are down. The sales of FMCG companies are down. So there are some items which are not performing well, and that is getting reflected in the overall consumption data. But what we do expect is that when food inflation starts to ease, we should see that consumption will pick up, because one of the main reasons that we are seeing is that rural consumption has taken a hit, and that is because food inflation is high. A greater proportion is being spent on food, cereals and all. And if rabi production is good, it should bode well for rural consumption going forward.
And what about urban? Do we get a sense of rural versus urban not doing well?
So again, we can look at a bunch of indicators, and there what we see is that rural consumption definitely has not been performing too well. On urban consumption, there are mixed pictures. There are some sectors that are performing well, but there are some other sectors that are not performing well. So there is a mixed picture coming from the urban side also, and that is getting reflected in the various high frequency indicators. Like we spoke last week that sports utility vehicles are powering the growth in passenger vehicle sales, and so there is a kind of wedge between rural and urban. What needs to be seen is what happens in the coming months. If food inflation starts to ease, we should see rural consumption picking up and urban consumption also rising in a sustained manner.
Radhika, going back to the GDP numbers, we talked about how this was a surprise for everyone. Is there any particular factor that was a surprise? Like industry services did well and we were expecting that to happen. So why were these numbers still a surprise? Is there?
So see, if we, dig deeper into the numbers, we see that it's not, overall GDP is a surprise. But when we look at the gross value addition, which is GVA, which is the activity variable, it grew at 6.5%, perfectly in line with expectations. So there is what is interesting to note is that there is a wedge between GDP and GVA, gross domestic product, and gross value addition, and that the difference between the two is the net indirect taxes. So now quarter 3 was particularly significant because here what happened is that government did not spend too much. There were slower rollout of subsidies, there was slower revenue expenditure, but tax collections were buoyant. So that gave a boost to GDP but not to GVA. GVA will rise if there is greater rollout of subsidies. So normally if you see, we do not see such a big difference between GDP GDP and GVA. But this time for the third quarter, we saw that, GDP was 8.4% and GVA was 6.5%. So there's roughly a 2% difference between GDP and GVA. So that is one reason that has driven that has given a spurt. And on the annual side also, if you see what has happened is that for the last year, the numbers have been revised downwards. So that has also given, your lower base has given a boost to the GDP numbers for this year. So that is the reason. But on the industry front, definitely there is a surprise because there was expectation that industry will slow down. Industry has slowed down, but not to the extent that was expected. It is still going strong. It is still on the positive front. On agriculture also, it was expected that it will slow down, but it wasn't expected that it will go into the negative zone. So there are these small elements of surprises in each of these sectors based on the magnitude of change. But services definitely was expected to improve. Construction continues to do well both in quarterly and annual due to the government's capex push and also due to the fact that residential demand is robust. So there is a demand for construction materials.
Construction has been doing well. It has been
doing well, yeah. So it's doing well in quarterly as well as in annual numbers.
Yeah. Radhika, we have some questions from our audience also. So Aditya is asking, do you think this 8.4% growth will slow down in the last quarter, considering the fact that major economies around the world have started to face the threat of recession? And on a linked note, another subscriber has asked, isn't Q4 generally the highest growth quarter for India?
So, see, if we look at the third quarter and if we look at the overall numbers, the annual numbers also, what we see is that, the net exports, which is the difference between exports and imports, which actually captures the external sector impact on India's GDP, it is progressively getting less of a drag on the economy. So its negative impact on the GDP is slowly coming down. So that is one good point that, our exports are slowly picking up, but our imports haven't risen too much. So the deficit has not increased. In fact, it has marginally reduced. So that has actually not contributed to, so much decline in our GDP. It's less of a drag on the GDP growth. So that is point number one. And also on the, we need to see what happens to the Red Sea disruption, because what we are seeing now in the recent numbers, we definitely saw that non-oil exports are suffering. We saw that, for some of the countries, for example, if we look at country-wise, our exports to some of the European countries have started to suffer now because of the Red Sea disruption. So definitely this is one thing that is a key monitorable in the quarter four, and it is something that could cause a drag on growth, but then there are other sectors that will pull up growth, and therefore the impact would not be so much because our external sector's impact on GDP is not that significant and tends to get offset by some of the other factors. But definitely it is a key monitorable because we are seeing that non-oil exports are starting to get impacted because of the disruptions. Oil exports can be diverted through other routes, but some of the non-oil exports are suffering. They have actually gone down in the latest quarter because of the disruption. So,
Sankalp has a question. He says, despite repeated grim predictions, India, and for that matter, global economy has not done as poorly. Even the US has posted a 3.2% first quarter growth. Why are the major global institutions and experts still being stingy with growth predictions?
So this is a very good point because, all the projections are going haywire. Even if you look at our own projections, we saw that, there was expectation that all economists had suggested that growth will be below 7%, and now we get a growth of 8.4%. So there are certain assumptions, there are a lot of uncertainties, and particularly at the global front, the magnitude of those uncertainties are way more higher than for India. They are a lot dependent on what happens to energy prices, what happens to global crude oil prices, what happens to geopolitical tensions, and also what is the interest rate trajectory. So a lot depends on what happens to interest rate trajectory, because they feel that if interest rates are going to remain higher for longer, GDP will slow down. So that is one reason for there being generally more on the downward side as regards projections are concerned. And then when the numbers come up, they are, for example, US has been more resilient. There were expectations since 2023 that, second half will show that US economy has gone into recession. It hasn't happened that way because of a confluence of factors. The one is interest rates, the other is the labor market there. So there are a confluence of factors, but generally what the standard setting bodies or the agencies making projection, they tend to think is that if interest rates remain higher for longer, it would start having an impact on growth, on demand, and that will slow down growth.
Radhika, Kushal Swaroop wants to know what these numbers mean for average Indian household. Does this mean that household incomes will increase or are increasing? And is this growth helping middle class people?
See, this is the overall growth. This is, if industry is performing well, definitely it is a good sign for the middle class also. If construction is performing well, definitely we can make inferences because construction is a labor intensive sector. It tends to provide employment, but only on the basis of GDP, we cannot have such direct inferences about what happens to the middle income class. There are a lot of other factors to be seen. So what is important is to see that on the one side, consumption is something that is still continuing to remain weak because of the high inflation levels and because of the high interest rates. One major thing that we have seen is that a greater proportion of incomes of people, particularly of low and middle income, it's going towards the payment of EMIs. And so that is reducing the proportion of income towards discretionary consumption. So all these factors have to be taken in conjunction. But if industry construction is doing well, if public investment is doing well, these bode well. What is important is to now see that consumption picks up. And from the policy front, what we can see is to ensure that consumption grows, inflation comes down, and that will give a boost to consumption.
But do we expect consumption to do better in the coming quarters?
So we need to see what happens to food inflation firstly and what happens to agricultural performance in the fourth quarter, because these are the two factors that will determine the trajectory of rural consumption and rural income. What is also happening is while that the farm sector is not doing that well, but the non-farm sector like fisheries, the other allied activities, they have been doing well. But the problem is that their proportion in the overall agricultural GVA is not that high. So there is also a case for diversification of the agricultural sector so that the GVA gets a boost, because farm sector will continue to depend on monsoons and weather events. So we need to ensure that there is a diversification. But overall, we do expect that, agricultural performance in the second half is likely to remain subdued. There could be slight improvement, but what the projection is that it's going to remain subdued in the fourth quarter based on the second advance estimates.
Got it. Radhika, Gautam Singh is asking, in the backdrop of recent findings on the consumption data regarding reduced contribution of food in the overall spending, do you feel that the government should look to revise weight of food in overall inflation? And this could help get us more realistic picture of GDP. How do you feel this revision could change our GDP projections in the coming year?
So, yes, so this is relating to the survey, consumption expenditure survey numbers that were announced earlier this week. So what we do see is that the proportion of spending on food has come down for both rural and urban. But, what needs to also be seen is that this year, 2022-23 was generally a good year after 2 years of impact of COVID. So this was the first year when there was a high pent-up demand. So I think there is a need to look through more data, I think there is one more survey expected to come. So that will determine. But if we generally only go by this survey results, then we should see that the weights of food in CPI should come down. Whether it will come down or not, whether there will be one more survey, those are something that we need to see, because right now only the fact sheet has been released. We need to see the full report of the household consumption expenditure survey. But in principle, yes, because the share of food has gone down, it should also get reflected in the CPI numbers. And if it does get reflected, then the CPI will show a lower reliance on food inflation, because roughly right now 45% of CPI is food. If it comes down, then impact of food inflation on the overall inflation will be lower. That will have implications for monetary policy, and then that will have implications for GDP and other things. But there are some factors that we need to consider more patiently, that whether this is actually a representative year 2022-23, because this was the first normal year after 2 bad years. So it's an extraordinary year. Consumption was high. And the other important thing is that in this year, there was a lot of support being provided by the government to the rural population. State support, state funded mechanisms, programs were in place. So that could have also given a boost to consumption. So based on all these factors and controlling for all these factors, we need to then make a careful decision on whether these should result in revising the CPI weights.
Thank you, Radhika. With this, we come to the end of today's Macro Sutra. Please do join us next week again.